Good evening. This is Ken at Tortoise Capital with a review of the weekend trading report for April 4th, 2020. Wash those hands. Bearish volatile conditions favoring the short term opportunity trading. Oversold nearly in all dimensions except for the 10 period, so we're on the boundary of neutral and oversold. Red bearish in the percent stretch compared to the 200-day moving average. Still strong bearish ADX. Risk Z has improved to minus 0.57, so it's come almost 3.5 sigma off the swing low here. And so this has been favoring this rebound move, but we're at a critical state right now. Blended month rebalancing has been updated for this month, and you can see the leaders in each of the portfolios. This is independent of them being above or below their 4-month moving average. So like the Qs in Japan would normally be held in ETF 13, but they're both below their 200, so that's why they're replaced by cash. ETF 2s at 0%. I'm showing an alternate display on the monthly and the weekly market health check. I think it's a little bit easier to see. So price is the black line. The thick blue is the 10-period moving regression. That's the proxy for price. This thicker dark black is thicker black line is the 30-period moving regression. This Bollinger Band is a 10-period Bollinger Band on the RL10, so it gives you the dragon. This gray band is a 30-period Bollinger Band on the RL270, so it acts like a noise buffer. So we count the 270 as fair value for long-term buy and holders. On a monthly chart, that's really long-term buy and holders. That's like decades. And then this gray area represents a noise buffer or a noise boundary about that. When there's been such an extraordinary long-term run that the width of this gets extreme. At turning points, what you'll notice is it collapses like a bow tie and then goes on the other side of the RL270 just for fun. So the green is the 90. This was a signal of really good strength. So that's a 9270, a fast, slow crossover to the upside here. The 90 just started to turn. The 10, of course, has fallen. This end price has come all the way down to 248. So what this is used for in our mind is that when we see extreme stretches from the RL10 and the RL270, you have the greatest difference of opinion between the long-term buy and holders and the short-term traders. Now, this is fractal, so on a monthly chart, this isn't really an extreme. And so we can then measure that distance back in time and express that in the terms of like monthly ATRs, and then start estimating the reward to risk ratio. I want you to notice that violations of the dragon should be respected, and that the dragon as a boundary is a pretty good idea for a trailing stop, wouldn't you say? There's a research project in there for you, Martin, if you're in the sound of my voice, and Danny. I want to see something on that by July. That's a really good idea. Man, that's a good idea. We just moved into the fall. Well, you guys heard it here first. That's what it's like. Then the 30-90 crossover is pretty significant too, although in that case it's really kind of too late. I think that's the key. But that ought to give you some kind of seasonal approach, that when the 30 is above the 90, that's always a good thing. when it crosses below, it's kind of a bad thing. That's too slow. No, it's the belly of the dragon. Okay. Weekly, again, the same thing, that we can start measuring the distance from the RL10 to the RL270, and then notice how symmetric that gets about the 270. The belly of the dragon is still pretty good. That ought to warn you to maybe take half or a third. And then violations of the 270 are significant on weeklies. Like here, that would have protected you at about 315. Boy, that's a good idea. Look at that crossover. It was already warning here. That's what that warning does. When that MACD histogram is that far out of the Red River and then it crosses over its 5-period moving average, warning. And after a long period of time, when it reverses and crosses back over, that move in the fall. Oh, fall going back to summer. Look at this one. Summer going to fall. Winter going to spring. Bam. That's why you pay attention to this rascal for seasonality. Daily, the 1 period, 10, and the 30-day ranges. We are getting ready for an owl entry, so a breakout above. I would say probably the green line here is going to end up being an owl. Although, now if we get a breakout above this first, the daily high, the 2-day high, when it emerges from the dragon, which is above Monday's opening, above 255, that would trigger an owl entry, because you have an unambiguous move, a P1, regression line crosses the dragon is rolling up, and now the 30 has started to roll up thanks to the PSAR. So the green line is a buy, and each of these green lines is an additional buy because it's an additional confirmation of achievement. We're in the spring, in the middle of the Red River. This is a critical state. There's a really strong argument for a move to the downside and a large move to the upside in short periods of time on a compressed volatility. That's just waiting to pop. And all the news about energy over the weekend is going to send ripples. Looking for extreme winners and losers on all of these now. Real estate smashed, utilities, and the Russell smashed. So let's see, what's the logic that ties those three things together? In the Dow, American Express and Boeing just smashed. But Walmart, Pfizer, CAT, Nucor. Nucor is a placeholder for me right now until Raytheon Technologies, which Raytheon and United Tech just merged, until they get some price data in there. I'm substituting Nucor because I'm studying that one. Sector spiders, treasuries, oil, energy, but this is going to get smashed on Monday. It's going to look more like this. Home builders, metals and mining and banks, and that's leading to weakness in timber as well. ETF Max, wow, that's all the volatility plays right there. Look at that difference between the short term and the midterm. VIXM. How about that? U.S. suffering on the value side. Only the large caps pulling it together on the promise of trillions. Mexico and Brazil just getting smoked. Mexico's a beautiful short right U.S. at 56 is better than EFA at 51. Emerging markets are better than Europe. Oil's going even lower. Corporate bonds. Tech is losing strength. XLQ or XLK and the Qs both are white and green, which is white and green. Was great, now good. Preserve profits. Watch for resumption. They can be traded intraday as well. That is some amazing volume in SPY right there. And tech. Wow, that's large. Shifting to the daily. The daily video is already up and posted, so I'm just going to call that one there. That's on the Patreon account, on the Patreon page there for members, for you to listen to. Take good care. We'll see you in the chat room and in the learning management system, which is getting built out pretty nicely with educational courses. So thanks so much for your kind attention. Please stay safe out there.